Hey guys, welcome back to the channel, and today I want to show you all a beautiful strategy. And this strategy is so unique and beautiful and very easy to trade, and it doesn't happen all the time, but when it happens it's kind of like amazing. It's beautiful. So yeah, we are using the 4-hour time frame and the 15 minutes time frame, and what you are looking for is the bias. Our bias is a valid bearish or bullish and 4-hour candlestick. I didn't say that right. A valid bearish or bullish order block on the 4-hour time frame. So that is the bias. Any 4-hour bullish or bearish order block. So, and a bullish and a valid order block is any, for bullish example, a bullish order block is any bearish candle that has a bullish candle closing above the high of the bearish candle. For example, this is a bearish candle. You see how these two candles, these two bullish candles closed above the high of this candle with what? With a body. It closes with the body. That is valid. You see how this bearish candle, and this is a bearish example. You see how this bearish candle closed the low of this bullish candle with the body. This is a valid bearish order block. So this is a valid bullish order block. This is a valid bearish order block. So yeah. So let's get down to the example. So let's say we are I'm seeing, let's just focus on this accumulation range down here. So let's say this is the new day we wanted to trade right here. That's the new day we wanted to trade. So this is, we mark the valid order blocks, which is this one right here and this one right here. So these are the two available order blocks currently, right? So we just trade in direction of, we trade the first order block that gets triggered. So we go to the 15 minutes time frame, and on the 15 minutes time frame, what we are looking for is, we are looking for a fair value gap and a break of structure. Fair value gap and a break of structure. That's what we are looking for on the 15 minutes time frame. So right here we see how price triggered the order block right here, and the next thing we saw is you see these consecutive bearish candles, and you see how this 1 2 closed above the high of that candle. That is the shift in market structure. That's the shift in market structure. And this is also a valid shift in market structure. I don't want it to appear like we are cherry picking. There's a reason why I'm using the high of this candle, this particular order block, right? So sometimes we have only one bearish order block like this, sometimes we have two, sometimes we have three. So if it is more than three, we are using only the third order block. We are annotating the third order block. The moment price breaks that third order block, we want to see a fair value gap, right? So this one is 1 2, and this is why we are using the second one, because the consecutive candles, that's what makes up another block. So right now, but this consecutive candles is only valid on the 15 minutes time frame. When we are looking it on the 4-hour time frame, we are only looking for one single order block. The displacement that confirms the order block can be more than one candle. I mean, the displacing candle can be more than one candle, but the order block itself have to be one black or bullish, bearish or bullish candle. So but on the 15 minutes we are using consecutive candles, so it can be more than 1 2 3 If it is more than 3 candle, we are focusing on only the third candle, not more than 3 candles. So it is only a 3 candle order block that is valid, and that is our concern. For some reason, that is how the market just work. I don't know why. So right here we have only 2 order block, 2 bearish candles that form the order block. So right here we see how price broke the second candle, confirming the validation of the order block, right? Or change in the state of delivery, or market structure shift, right? So now we have the injection here to a 4-hour order block. We have the market structure shift. The next thing we are looking for is a fair value gap. If there is no fair value gap, there is no setup. So right here we saw this fair value gap right here, right? So we take longs. And the 50% of that gap. Our stop loss will be at the open of the middle candle, the open of the middle candle, which is at this level right here. And we are targeting probably 1:3 or 1:4. In this case, 1:4. And as you can see, it was a beautiful. The market worked out pretty well. So yeah, we mark our valid order block on the 4-hour time frame. We go to our 15 minutes time frame, wait for price to inject it, and create a market structure shift and a fair value gap. And we enter from the 50% of the fair value gap, and we target 1:4. Our stop loss is at the close of the middle candle, the open of the middle candle of the fair value gap, the middle candle of the fair value gap. Our fair value gap is formed by 3 candles, 1, 2, 3. The middle candle, the open of that middle candle is where we keep our, our SL. So yeah, let's look at another example. Now we are going to look a bearish example, and we end the video there. So right here, there's another example here. We have a valid order block here, 4-hour order block. Now we go to the 15-minute time frame and wait for it to be injected. Now we saw our price tapped into the gap, and like I said before, as you can see here, we have more than 3. We have more than 3 order blocks. We have 4 order blocks here. So since it is 4, we are only focusing on the 3rd candle. That's what I was saying. So now you understand. So this is the shift in market structure after the injection, and here is our fair value gap. We have 2 fair value gap, but we are using the first fair value gap. And this 1, 2, 3, as you can see, this is the open of the candle, and if we kept our stop loss there, we would have been kicked out and price would have gone in our direction. But that is how it is. We have times that trade happens like this, and this will not change the fact that this is where you're supposed to keep your stop. If you want to risk higher, that's your business. You just need to backtest the strategy and look um, you choose the one that works perfect for you. But I trade it this way. I keep it at open, and in this case you see that it was a loss, and price went in our direction anyway, and that's the most important thing. It works. So yeah, let's take one more bearish example, and let's call it a day. So yeah, there's another one, a valid order block right here, a value for our order block. Yeah, so we go back to the 15 minutes time frame. So right here we see how price injected the 4-hour valid order block and shifted structure right here with one single block, one single order block. You see it's more than one bullish order block, bullish candle here, but the moment it closed, displaced below this first order block, you see how it created a fair value gap, and that is the most important thing. Once it breaks another block and creates that fair value gap, that's what we want to see. And right here we enter, and the open of the fair value gap is the stop loss level, and as you can see, here's the open of that fair value gap candle right there. And in this case it was less than one it was less than 100 pips stop. Probably we just give it a 100, and if we target 2000, you see how the strategy can be crazy sometimes. So you're targeting 1 to 4, which is this, and you know, just play with the strategy and see how beautiful it works. So yeah, so this is the strategy. If you know you're enjoying this video, please like, subscribe, share, and make your comments in the comment section. And yeah, I'll see you guys in the next video. And please don't forget to subscribe. And if you have any more questions, please don't also forget to lay your questions in the comment section. I will reply to all your comments. See you all in the next video.